Hey guys, it's your boy Blackrue back with another video. Catch me every Monday at 7 p.m. Eastern Standard Time on the Benzinga channel where we do the Ruell Report, where we go over stock and we go over crypto. We're going to get into this today. This whole thing is a part of the beginner series, and this kind of came out of a conversation I had with my wife and one of my in-laws. I just wanted to do a quick video explaining crypto. And I'm a firm believer that things are not as hard as people make them sometimes, and that there's a whole reason for that. But I think I can really just break it down for you guys real quick in a less than 10-minute video, especially if you guys have any experience with stock. But it's all going to be common sense stuff that makes crypto just very easy and very simple to understand. So let's get into it here. Okay, so to kind of explain crypto, we need to understand a couple things. Um, let's 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 dispel a couple rumors first. Of course, crypto is young, but it's not really that much more volatile than the stock market, to be honest with you. The stock market really, it just, in my opinion, veils its volatility with the S&P 500 or the SPY. And if you don't know what that is, SPY is kind of basically like it's the main kind of ETF of the stock market with the topmost 500 companies kind of in the stock market. And as long as this is kind of going up, everyone kind of assumes that the stock market is good. But that's not really the case because there's so many different sectors in the stock market. Like for example, um, when Rona hit, a lot of stock market went down, but there was a portion of time where okay, everything started going up, and the S&P 500 started going up. However, the airplane companies, since no one was traveling, were still decimated. So that's my example there. Just the crypto market really isn't that much more volatile than the stock market. And then, second thing is to understand crypto is not really about the cryptocurrency part. A lot of people get hung up on the current currency part, but it's mostly about the blockchain. That's the big thing. And the blockchain technology, you can almost think of it as kind of a certificate of authenticity, kind of just but in computer form. I don't know if any of you guys ever like collected cards or whatever, but there was a certain certificate you got from a certain company that verified this is Nolan Ryan's signature. This is Barry Sanders' signature. This is Ken Griffey's Ken Griffey Jr.'s signature. And the same thing goes like if you like had a Van Gogh or a classic piece of art, there's a company that would probably verify, hey, this is a legitimate Van Gogh, this is a legitimate Da Vinci, stuff like that. So the blockchain kind of automatically in computer form is unhackable, but it's a traceable record that says like when you bought this, where you bought it, like who you bought it from, that you're the buyer. So it's a built-in record that's kind of unhackable. Okay. And then the second part of crypto explained there, we got the blockchain. And then the next important part really is the decentralization. So basically decentralization is like kind of takes things back to like olden times. Instead of having these big conglomerates like Bank of America. So when you go do banking with Bank of America, there's this centralized bank that charges you all these fees. There's a whole bunch of things going back on in the background that you can't really track or can't say that you're aware of. That whole centralization part, um, it kind of puts things in like this whole secret cloudy area where there's things happening that you don't necessarily know what's going on. But with decentralization, it kind of brings it back into like a kind of a hunter gatherer kind of like a trade and barter system almost. So now everything's decentralized. So essentially, okay, I'm doing a deal with you almost. That's basically what decentralization means. Instead of um, it being like, okay, now I'm doing a deal with Facebook, this big centralized conglomerate company, or I'm doing a deal with Johnson and Johnson, this big decentralized or this big centralized company. It's now like I'm almost trading with you. So everything's decentralized in that like it's more just like just two people making a trade and transaction. Now, the next big part of crypto explained is DeFi, and that's decentralized finance. So that's just like we explained here, right? So, um, so decentralization is like a trade between me and you. So now decentralized finance is like, okay, this is finance between you and me. So what this does, and this is why a lot of people, like a lot of banks and things, may be really scared of crypto because now with decentralized finance, it's like I'm doing a loan. It's a loan between you and me. So now the terms are way better because with these whole centralized banks, the terms have gotten worse and worse and worse for us. Um, as users of these centralized places. Like, remember, there was a time where like we'd have an actual percentage of interest on our money, but now it's like 0.001% or something like that. So all of the terms have become worse for us, us like normal people, and for the centralized place, all the terms have gotten better. So now with decentralized finance, now the terms are better. So you get better lower rates on a loan if you were to do a loan with decentralized finance. Your interest rates aren't okay. Now you're stuck to the interest rates of these centralized um, banks. On the same token, you get better, higher rates when you allow the bank or the crypto to hold your money. So, um, so that's why decentralized finance is very, very, very probably scary to the banks because now we're just doing a trade between you and me. So now the terms are better because we're cutting out this centralized middleman who like kind of fractions up everything to whoever he wants to. Now it's kind of decentralized. So you and I can just trade with each other through this cryptocurrency and we're giving each other better rates. Okay. So after the DeFi part, the last part to understand is tokenization. And this is where NFTs come into place. And to explain this, I have to say that you have to realize that really nothing has a value until we assign a value to it. Like, be it gold, be it silver, be it, remember we were talking Van Goghs and paintings. That have no value. Like even like baseball and basketball cards, which a lot of people would understand. Like what? It's just a piece of cardboard with a picture on it, like of an athlete. You could just assume, take a picture on your phone and put it on a piece of cardboard, right? But now when we humans, like, and it would have to be a group of humans, like, because like if just one person has value on it, it's going to be hard for you to sell if they don't want it, right? So now we group of humans like assign a value to something. Now it has value, like basketball cards. I can trade my Michael Jordan rookie card for X amount of money because a group of people say this Michael Jordan rookie card from this company, Upper Deck or Tops, is now worth this amount of money. I can now trade my uh, expert Van Gogh painting from like the 1500s or whatever, whenever Van Gogh was around, because this group of people says that this Van Gogh painting is worth millions of dollars. Now, let's take that whole concept and put it into the virtual space. So basically, NFTs, which you don't really need to know what it stands for, but if you want to, it's non fungible tokens. But what it really is the tokenization of a real life asset that has value into the virtual space. So, like back to our example of basketball cards, which is a really simple example because it's like, okay, we've determined like this Michael Jordan rookie card that was made in 1985 or whenever Jordan was a rookie by Tops now has a value because people are willing to buy it for this amount of money because it's the first card that Michael Jordan ever had by this company, like etc. Now, um, now we've actually have a company called NBA Top Shot that makes basketball cards, and they call it like a moment, which is basically like it's not a JPEG, it's more like an MP4, like it's a little video. So it's like they're putting a little spin on the basketball cards, but essentially it's a basketball card. So now that's an NFT. So take the real world example again. You got a Michael Jordan card made in 1985 by Upper Deck. Come over here. Now we have this this moment of like Russell Westbrook or Michael Jordan, whoever, dunking on someone. Okay, this is the first ever card made into an NFT. This is the first ever moment of that. And the blockchain, remember how we were talking about the blockchain? Now, the blockchain brings the actual certificate of authenticity in, or the actual record in that says, okay, uh, Ruell bought this, or Blackrue bought this. He brought it at this time from this company, and there's only 500 of them. So now we have a tokenization there. Same thing with art. So let's say, and this has actually happened. Let's say we have a popular artist. I'm not going to use the artist who it actually happened with because you may not know him, but let's just go with Van Gogh again. Let's say that someone had this Van Gogh painting, right, and they want to say virtualize it, like put it, tokenize it, and make it an NFT. They can say, okay, I'm going to now make this Van Gogh a NFT. I'm going to now burn this Van Gogh painting and say there's only like one of it in existence. So let's say he says, okay, I got this one of one Van Gogh. I'm going to take and make it into an NFT, put it in virtual space, and burn it. So now the only copy of this that exists is in this virtual space. Now, granted, that would be like, I don't know if he should do that, but technically you could now say that this is now the only copy of that painting that can be verified because now the blockchain has verified this painting. It's the only copy of that Van Gogh that exists. However, um, with the records of that, it may not be as worth as much as that Van Gogh because okay, who's willing to not pay for that NFT? This NFT was made in 2021, whereas the Van Gogh painting that was burnt was like 500 years old or something like that. So not always can you have a one to one there, but that's essentially what it you can think of it as. Um, it's taking something that has a value in real life and kind of tokenizing it. And the best examples of that are um, like art and like basketball cards. Now, if we get into one more example, and this will be the final example because once you understand like these 5 points, that's really crypto. um, that it's not that volatile as stocks, but we'll go over it later. Okay, this last point about tokenization is, again, you can tokenize anything that has value. And this is one that I was explaining to my wife. And this is, I'm going to make a real world parallel about this. So it's going to be record sales, like music. So in real life, someone owns it. Like what Jay-Z calls it is like the masters. Someone owns the rights to that song. They've now gotten to the point where they're going to tokenize masters or the rights to a song. So say like, okay, Rockefeller Records, which is like Def Jam, or like let's say Rockefeller Records, Jay Z's brand, but everybody knows Def Jam, so I'll go with Def Jam, or let's go Sony. Everybody knows Sony. So let's say Sony owns a right to one of Jay Z's songs. So now Sony goes and they sell a whole bunch of CDs of the song. And just because someone owns a CD doesn't mean they own the rights to the song. They own a CD that gives them the right to play the song wherever. Now, if they try to use the song and make profit from it, like if they make it like a bootleg copy of the CD, that's why it's illegal. Because Sony's not getting paid because they actually really own the rights to the song. If you make a bootleg copy of the CD and try to sell it, then you're breaching the law. Okay, so um, so in this example, if you could make an NFT to the rights of the song, but you could also make an NFT to the right to play the song. And just like in real life, if you tried to use the NFT that just gives you the right to play the song and you tried to sell it, you would be doing something illegal because you only own the right to play the song. You don't own the NFT to the actual commercial rights to the song. If that makes sense. So so you could NFT the rights to the song, and you could also NFT the right to play the song, which is essentially the same as real life, which is Sony may own the commercial rights to profit of a Jay-Z song, whereas you and I, when we go buy a CD, we own the right to play the song on from the CD. We couldn't go bootleg copy the CD. We couldn't go put the CD in a movie that we're selling for profit because we don't own those rights. We have to purchase those rights from Sony or come up with some type of agreement with Sony where it says, okay, we can play this in the movie, or okay, which you'll never get, but okay, I can sell a bootleg copy of the CD. So once you look at that concrete example, that really shows you really you can NFT anything of value. You can NFT the rights to the song, the master to the song. You could NFT the right to play the song. Okay, so yeah, so that's the last example, and let's just go over it again. This is a little review. Um, Crypto, although young, is not really much more volatile than the stock market. The most important parts of it are the blockchain, which makes it basically a traceable, unhackable record that you slap on any part of a cryptocurrency, like of a cryptocurrency or like a NFT. All of that has a blockchain authenticity connected to it. And then we have the decentralized part that makes it like a trade between me and you, which basically like kind of breaks down and dilutes the power of these centralized agencies that are kind of like effing over you and I. Um, so then you get to the important parts. We got like DeFi, where we got decentralized finance, where you and I are basically making a trade between us, you and I, instead of being going through a centralized bank. And that's that really scary part that banks don't like, that decentralized finance part. And that's kind of here where the currency part comes into play, where it's like, okay, it's a transaction, be it financial, between you and me, instead of a transaction financial between me and my bank and you and your bank. So that's why it cuts down on so many different fees, because it cuts out those centralized middlemen who are on both sides of a transaction between me and you. Um, and even we could even break it down further, because it's like, if it's a centralized transaction, it'd be me and my bank and you and your bank, and then there's probably transactions between those two banks where they're having a centralized thing between them. So it cuts all those people out. So it's just you and I, which is why all of those all of those things give us better rates. And then tokenization comes into where the NFTs come into place, is basically taking anything in real life and making it into a virtual thing on the blockchain that can be tracked and given a record, and now people will assign value on if this is something that is valuable or not, like an NFT basketball card. So that's crypto explained. We might have gone a little bit over 10 minutes. Oh, crap. Well, it's 21 minutes, but I think that's the most simple explanation that you can get about crypto. If anyone has any questions, feel free to put something in the comments. Please like and subscribe, and check out some of my previous videos here. Thanks so much for listening, guys. Have a good one. Peace.